welcome back to Delta Code. I'm Delta, seasoned economist with over 20 years of investment experience, and today we're going to continue covering companies that are reporting earnings this week. And today we have quite a few: Uber, Shopify, Toyota, ARM, Robinhood, Airbnb, and Trade Desk. We're going to go straight down the line. Let's just jump into it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
Starting with Uber. Uber dropped down. Unexpected loss from Uber. Missed on bookings. Now, Lyft went up yesterday. I think Uber is trying to charge a lot more for their rides. Just anecdotally, going to and from airports, when I do a ride-hailing app, I open both Uber and Lyft and whatever else in whatever country I'm in, and I just choose what's cheaper. It's totally a commodified business, and Uber trying to charge more is not a good business model. Next one, Shopify. Shopify fell from 77 to 60. Revenue outlook weakens. I don't know why the stock sold off so much. The revenue is up 23 and 29%, adjusting for sales and logistics. Gross profit is up 33%, and free cash flow margin doubled to year over year to 12%. Gross merchandising volume increased 23% to 60 billion. Revenue increased 23% to 1.9. Merchant solution revenue increased 20% to 1.4 billion. Subscriptions, everything actually looks really nice. Maybe investors were expecting more, but that's a really good quarter and not bad guidance. We'll consider adding this back to our portfolio. We'll take the 18% discount. Thank you very much. Next up, we have Toyota. Toyota pretty flat on the day. Not much changed. Seems like they were pretty flat after they reported blowout profits. All right, next up is ARM. ARM Holdings is down about 10% for the day. Guidance had a solid quarter, but guidance was shy of consensus. Licensing business was quite lumpy, and their forecast is hard to do over multi-quarters, let alone years, to know how much to guide for in the future. Next up is Robinhood, up about 3% for the day. They had a really good quarter for their interest business. They brought in $329 million of transaction-based revenue. Its first quarter top estimates of 255. Net new deposits rose 40%. And on this news, Robinhood is up. Let's not forget that they are being sued by the SEC for their crypto business, which is one of their most profitable arms. Next up, Airbnb, down about 9 or so percent. Not good. This is an example of company reporting profits that were more than double the last quarters, but disappointing revenue forecasts, so the stock dropped. Net income rose to $264 million for the first quarter from $117. Revenue rose 18% to $2.14 billion. Earnings per share were 41 cents versus the 23 cents as expected. So almost double, right? And the stock is down. Why? Because the projected revenue for the second quarter of $2.68 billion and $2.74 billion, that fell short of the expectations. Somewhat because of unfavorable exchange rate. The dollar has been really strong lately, so their international business is suffering. When you convert it into dollars, it's not as much profit. I, for one, am not a fan of Airbnb anymore, just because of the cleaning fees. And on top of the cleaning fees, they expect you to actually do some cleaning after yourself. I prefer to stay in a hotel and just leave my mess there. Fun thing you can do is, as you leave the hotel, you roll up your sheets to make it look like a body is under there. Fun for the maid. Last one is Trade Desk. Pretty flat for the day. Little down, actually, from the recent 92 to 86. They had a really good quarter in my opinion. Revenues were up 28% year on year to $491 million. Guidance for next quarter was better than expected, $575 million, so better than this quarter. And they made a non-GAAP profit of 26 cents per share, improving it profit of 2 cents per share in the same quarter last year. Gross margin was 78.9, up from 77. Free cash flow was 176, up 176%, and market capitalization is 43 billion. If you're not familiar with Trade Desk, they offer cloud-based software that uses data to help advertisers better plan, place, and target their online ads. We've had this for a long time. We did sell it to buy Coinbase, but we may reconsider picking up shares. This is their revenue over the years. You can see it's a nice upward sloping trend line with some seasonal drawdowns, but this is like really interesting pattern for their revenue. So on to the next one. Just to touch up on Tesla, because there's some announcement for FSD and rolling out. Stock is down today a little bit. Over the past 5 days, it's pulled back some of the gains post Elon talking about robotaxis. Now, Ferrari also announced. Where's Ferrari? Yesterday, I didn't cover it, but I thought it would be an interesting comparison with Ferrari because they are one of the most profitable car companies. They have really great margins. They are worth $73.4 billion. Profit margin over 20%, operating margin 27%, return on asset 12%, return on equity 43%. Amazing revenue, $6 billion. Revenue per share, $33. Quarterly revenue growth, only 10%. That's not bad. And EBITDA of almost $2 billion. Diluted earnings per share, almost $8. Quarterly earnings growth, 18%. They have $1.3 billion of cash and $2.6 billion of debt. Debt to equity is pretty high, almost 80%. Now, short interest is, this is where Coinbase was a couple of months ago. Speaking of Coinbase, similar numbers, worth 50% less than Ferrari, better margins, revenue not as big yet, but I'm sure it will beat those numbers soon. Growth is much better and better balance sheet and no longer shorted as much. The number I really like to look at is price to earnings growth. Compare that with Ferrari, that is at 21. So one of these companies is priced a little better, both PE and PEG. Want to buy Ferrari, or do you want to buy Ferrari of stocks? I know what I'm doing. Here is Coinbase income journey since third quarter of 2020. You can see that in 2021, they had an amazing year of just banking profits. But they also ballooned their expenses in blue. You can see the blue expenses. They grew steadily as they were making more money. They overhired. They just went public. So there was a lot of missteps. However, in 2022, they realized we're losing a lot of money. Expenses are unsustainable. And they started, laying off people. They cut their workforce from 5,000 to the current 3,400. And they steadily decreased their losses. And you can see in blue, their expenses became under control. Since Q1 of 2023, you can just see it's pretty steady. Recent growth is actually them paying for their customers to use Base, the fees that they made almost $60 million last quarter. They're actually subsidizing some applications to make it free transactions for users. This is how we onboard 1 billion people to crypto. As I mentioned in one of my videos back in December of 2023, once Coinbase has 4 profitable quarters, they become a candidate to be included in the indices like the S&P 500. Q3, they lost about 80 million. At that point, my forecast suggested that they will start being profitable, and they were. In Q4, they made about 200 million, and then 1.2 billion this past quarter, which is a huge jump in profit. Next quarter, they might not make as much money. The huge jump in profit here is due to accounting rules changes, where now companies can mark to market the fair value of their crypto. Previously, they had to value their crypto on their balance sheet they're holding as an investment at the lowest price that it ever was, which is unfair. If you bought Bitcoin at 30,000 and it fell down to, let's say, 20, then you lost 50%. But then if it recovered to 60 and now you're up 50%, you still have to say it's worth 20. So those accounting rules came into play in 2024. So now last quarter, Coinbase reported $650 million of gains on their crypto investments. They will not be showing that next quarter because crypto prices haven't changed that much unless they do. But assuming the crypto prices stay pretty steady in the next quarter, that $600 million or so of profits will be pretty muted. But they will still have growth in their revenue and other businesses. One of the reasons that Coinbase has been down in the last few days is, which doesn't make sense since they reported an amazing quarter, is ARK is selling. Kathy Wood at ARK Invest is selling Coinbase from a lot of her ETFs. Right here, Coinbase is number 3 position in the flagship ARK fund at 8%. And in the financial fund, F, it's the biggest position at 10.3. In this one, she actually has to trim down to 10% because they try to keep all their positions at no more than 10% of the fund, any one position. So it's a risk mitigation strategy. So don't be frightened by ARK selling. They also sold last quarter at 130 at the worst time before the stock shot up to 280. So often when ARK is selling, it's a good time to buy. Not always. They were also buying when it was $30, $40, and $50. So that was also a good signal when they were loading up. I think they're just trimming their risk to buy some of the other companies like Palantir and other ones that have been hit recently after their earnings. Maybe some Tesla. I think they're already maxed out on their Tesla. But maybe UiPath. Maybe they're buying some more Robinhood because they reported a good quarter. Last, let's take a look at the crypto markets. Holding at about $2.3 trillion. Bitcoin is hovering slightly over 60,000 at 61.5. Ethereum is hovering at 3K. Solana is holding a 140, 150 range. And then the rest of the market is a little choppy, though in the last 7 days, there's plenty of gains in the double digits. Arviv, Render, Thorchain, Near, and many other cryptos are seeing positive double-digit numbers for the week. In our portfolio, we have sold some crypto from last week, and we have bought more Sui. Sui is a alternative layer 1 that has a parallelized EVM that can have over 200,000 transactions per second. Now, this is a network that's not proven yet because they don't have that many users, but definitely a contender this cycle for the layer 1 play. So we picked up some of that. I wanted to show you this chart when it comes to crypto. MicroStrategy, this is the company from Michael Saylor that has been a huge advocate for putting crypto on companies' balance sheets, has over 200,000 Bitcoins. They're one of the largest holders. Second is USA. Now, why is the country of America holding 1% of Bitcoin? Why don't they just sell it? That's a lot of money. What is that? $12 billion, something? China doing the same. UK, Germany, Ukraine. they have a lot of Bitcoin. Why are they holding it if they don't believe in it in any way? Marathon, this is a company that mines Bitcoin. They're reporting this Thursday. We covered them earlier this week. Tesla has some. Obviously, Coinbase has some as an investment. Block or Square has some. And country of El Salvador, who explicitly made Bitcoin their legal currency. And last thing I want to show you is a moment of Zen from John Oliver, who said, Bitcoin is everything people don't know about computers combined with everything they don't understand about money. And for the day, we can see the heat map of the stock market, pretty choppy. Most of my portfolios are in red, as you can see here on the right. Regardless of whether they report or not, there's a lot of red in the streets. There is a saying in investing, especially in traditional finance, sell in May and go away. Usually summer months can be pretty choppy and not a lot of positive price action, where a lot of investors just take off with the summer and then they come back afterwards and they take with them their liquidity. Tomorrow, there's Roblox, Marathon, and Unity. Those are the only three companies we're interested in, and we'll cover those once they report. Remember, investing in high growth stocks and crypto is risky. So do your own research. Don't blindly buy anything, whether I recommend it or somebody else. I am trying to teach you how I evaluate companies when I look at their statistics, crypto projects, when I look at their underlying valuation and potential. So always do your own research. Think about it. Start small when you're entering a position. It's hard to pick the top or bottom. So there's no need to try to be a hero and say, oh, this is the bottom. I'm going to enter my position all at once. You can start sizing a position at any point. Buy a couple of shares, buy a couple of tokens. And then if it goes against you, but the fundamentals haven't changed, you can always average cost your price level down. Or if the price goes up and it's just confirming further your thesis, you can always average up. There's no need to wait for a pullback that may never come, and there's no need to buy if it dips. Take the new information that comes in and make a decision accordingly. My name is Delta. Thank you for tuning in today. Make sure to like and subscribe. And as always, may the force of compound interest be with you. Peace.